Tune into ESG Matters with Risk Insights, where we explore ESG with impact. Hi, everyone, and welcome back to ESG Matters with Risk Insights. I'm your host, Anushka Bogdanov. Watching my president stand humbly in the Oval Office last month and seeing the resilience of our various leaders in Washington made me proud to be South African. We love our country and we love our continent. So let's frame today's conversation. ESG is caught in the crossfire of politics, performance, and public pressure. But we are finally seeing it mature into something more honest and measurable. So let's begin with what I call the leadership paradox. 2025 has seen figures like Elon Musk and Donald Trump continue to shape not just markets, but the global narrative around ESG, and not always in ways that support progress. Elon Musk, once hailed as a sustainability pioneer through Tesla and SpaceX, has now become one of ESG's most vocal critics. He's labeled ESG as a scam, arguing that it rewards bureaucracy over innovation. Yet despite Tesla's clean energy leadership, its ESG scores have dropped, and this has been because of governance issues, social controversies, as well as the lack of transparency. This raises a deeper question. Can sustainability truly exist without accountability? What Elon Musk calls a scam is actually an evolving mechanism of corporate accountability. When companies refuse to disclose, engage, or improve, their leadership becomes a risk in itself. Now, on the political front, Donald Trump's enduring influence has weaponized ESG in the US. Terms like woke capitalism have become rallying cries. More than 15 states have passed anti-ESG laws, threatening firms for integrating climate risks and pulling billions in state pension funds from ESG mandates. This isn't just politics. It's a failure of leadership in the face of existential risk. Climate change, inequality, and biodiversity collapse are not ideological issues. They are security threats, market risks, and social tipping points. If the last 2 years were the peak of ESG backlash, 2025 is the year of ESG reset. It began in 2023 when Morningstar delisted 1,200 funds from its ESG universe for weak alignment with sustainability criteria. That purge was a wake-up call. Superficial ESG branding would no longer suffice. By 2025, asset managers like BlackRock, State Street, and UBS have largely dropped the ESG label from public-facing products, not because they've abandoned the goals, but because the term itself has become too politicized, too vague, and often too litigious. Investors are still pursuing ESG outcomes, but they now demand material and measurable results, and not virtue signaling. This shift has led to global adoption of ISSB standards, IFRS S1 and S2, setting a new sustainability disclosure baseline. Stronger green taxonomies across the EU, UK, and Asia, as well as there's been regulatory scrutiny of ESG rating agencies, especially in the EU and India. So in short, ESG in 2025 is more compliance-driven, data-heavy, and risk-anchored. We are witnessing the most significant regulatory transformation in ESG to date. ESG reporting has moved from being voluntary and reputational to being about liability, compliance, and fiduciary duty. The regulatory surge has introduced a new challenge, ESG fatigue. With frameworks like ISSB, TCFD, GRI, CSRD, and many more, companies are asking, which standard do we follow? What counts as material? And how do we navigate multiple jurisdictions? And even investors are overwhelmed. Fragmentation is undermining clarity, while compliance costs risk crowding out actual sustainability action, particularly in Africa. Now, without enforcement, standards remain aspirational. Few countries require third-party ESG audits. Penalties are symbolic, and greenwashing persists, while African firms are penalized twice, once for lacking infrastructure and again for being excluded from ESG capital flows. You can mandate ESG, but without capacity, it remains a tick-boxing exercise. In many African markets, ESG reporting is still in its infancy. Companies are expected to align with global frameworks, disclose jurisdiction-specific data, and quantify emissions and social impact. But the infrastructure does not exist. There's a shortage of ESG professionals, limited verifiable data, and few local ESG assurance providers. Even top firms often rely on consultants to retrofit reports rather than embed ESG into core governance. Smaller firms are often shut out completely. There's also a literacy gap. Many boards see ESG as PR. CFOs struggle to integrate ESG risks into forecasts. Regulators often lack the tools or training to enforce standards. This is why capacity building must become the next frontier. This includes curriculum reform across universities, board and executive ESG upskilling, ESG tech and AI literacy, training for regulators and SOEs. Otherwise, we risk ESG colonialism, global standards being set in New York, Brussels, and London, with little contextualization for Lagos, Kigali, or Johannesburg. We must build talent, tools, and trust infrastructure for ESG to thrive on our terms. And this is where we see institutions like CASI, led by Dr. Marjun, play a global leadership role. CASI's AI-powered sustainability education platforms are being used from China to Africa to Latin America, digitizing ESG learning for students, executives, and regulators at scale. Let me spotlight my doctorate research on South Africa's ESG paradox. I studied the ESG performance on the Johannesburg Stock Exchange from 2019 to 2023, and the findings were quite revealing. And this is at a very high level. ESG ratings show a positive correlation with market capitalization. Companies with higher ESG ratings tend to attract more investor value. But when you isolate these disclosure variables, such as the number of social, governance, or environmental metrics reported, the correlation disappears. And this tells us two things. Perception is being rewarded and not necessarily real ESG action. South Africa might have very strong reporting frameworks, but immature integration. And here's the irony. South Africa was doing S in ESG before ESG became a global term. And we did this through BE legislation, JSE requirements, King codes on corporate governance, etc. We had a transformation story to tell, but we didn't frame it as a competitive investment case. Instead, global capital continued to chase alpha, not social justice. Now, come 2025, every country is racing to build social equity portfolios. We could have led, but we didn't. The good news is we still have a chance, especially in the carbon markets. Africa has low historical carbon footprints and the youngest population on Earth. And this is our differentiator. We can lead in carbon credit markets, we can attract green capital and build climate resilient infrastructure, leverage tools like ESG GPS to localize ESG disclosure across exchanges, and secure green talent and green technology, and possibly leapfrog other economies if we stand strong on this advantage. But to seize this advantage, we need leadership that understands ESG as a growth strategy. Knowledge ecosystems from the township to the boardroom. Now, something that has bothered me on leadership. The ongoing feud between Trump and Elon Musk underscores the deeper crisis in leadership, where egos now overshadow accountability, eroding public trust in ESG as both a governance framework and a social imperative. So let me end with some of the work that Risk Insights is proud to be associated with over this month. Risk Insights has partnered with the Arab Federation of Capital Markets on ESG data, AI and governance across North Africa and the Gulf region. We've also partnered with ASEA to host the inaugural Pan-Africa ESG Awards this year in Kigali, Rwanda. It's the first time that Africa will celebrate excellence in ESG disclosure and stewardship across the continent. The public voting process opens in August, and I encourage you as our listeners to get involved. Whether you're in policy, investment, academia, or advocacy, this is your chance to vote for Africa's ESG champions. And stay tuned to Risk Insights, as we will be announcing a number of incredible partnerships across climate finance, AI, education, and sustainable investments. ESG is not just a reporting standard for us. It's a pathway to justice, resilience, and capital sovereignty for Africa. Thank you for tuning in. Let's keep shaping the future together. I am Anushka Bogdanov, and ciao for now.